Okay, so the next thing I'm going to talk about are HELOCs and HELs. So these loans are very big right now, especially with the rates where they have been. HELOCs and HELs are typically lower than credit card interest rates, and also the limits that you can pull out. It's based on your equity, so obviously the limit will be larger than a credit card unless you're someone who has a unlimited or a no limit credit card. Very few of those running around that I've seen on my clients walking in. I don't mean that there's just in general not a lot, but what's the difference between a HELOC? A home equity line of credit is a revolving credit line for 10, 15, 20, 30 years. You get to choose those parameters with certain lenders. Certain lenders only offer one or two of those options. And the way they work is that you're going to pay interest for a set term. It can be 1 year, it can be 3 years, it can be 5 years, it could be 7, it could be 10. Again, that's lender specific. And when you sit down with your loan officer, they'll be able to tell you what your interest only period is. So there are two types of HELOCs. It can be fixed or it can be adjustable. Most HELOCs are adjustable because once that interest only period is over, now you're going to pay principal and interest. Primary loans aren't done in this way anymore, mostly because it was handled so poorly in 2008, 2009, 2010, 2011. But that has been cleaned up. You can do an ARM, which will have an interest-only payment. There are still a few lenders running interest-only programs, but you're going to have to do a lot of extra not qualifications, but there's going to be a lot more forms you're going to sign so that the government knows the lender explained what an interest-only loan is and how it works. I have refinanced a couple of people who have had an interest-only loan that they purchased only 3 or 4 years ago. So it's not impossible to find those if that's what you want. Just make sure you understand exactly what you're getting. So like those loans, the HELOC offers that option. And you can use this money to fix up your home. You can use it to go on vacation. You can use it to consolidate credit. Those are typically the reasons people look into a HELOC. Now, a HEL loan is a home equity line, and it is a loan based on the equity in your home. So I won't tell you how much of the equity you can get because that is lender specific. So for example, if you have an $800,000 home and you have a balance of less than $400,000, typically that would mean you have an additional $400,000 in equity. So, or excuse me, not additional, you have $400,000 in equity. If it's $350 left, you have $450 in equity. So you can get a loan. There will be no payments on a HEL loan because it's your equity. You can make payments if you want. Again, that is lender specific, so you'll want to make sure you talk to your lender to figure out what if I pay the money back, because that is an option on these loans. Typically, they get paid back when you sell the home. It's deducted from the price of the home. But what if you never sell the home? That's where you're going to need to talk about that with your lender. So a HEL line is an equity loan. You get it. You don't have to make payments. So these are becoming popular now. People are starting to wake up and figure out what that means. Do make sure you understand all the parameters of this loan because it is a loan. It's not just an amount of money they just give it to you. Some of the commercial I have seen, this is why I'm trying to be so careful on what I'm explaining, is that they say never make a payment. It's your money anyway. Get the money now. Don't worry about it. That's just not how loans work. So again, not all lenders are equal, so do make sure you do one of these loans. It's from a company that is reputable or you're familiar with. There's good doctors, there's bad doctors, there's good lenders, there's bad programs. It's why the programs don't always stay around. I do think this is one of those programs that will stay around. So if you have any questions on that program, make sure you talk to a lender, a bank, whoever it is you're looking to get that from. And not necessarily have to read all the fine print. Of course, we want you to understand it. The big thing would be the interest rate, the payback terms, the prepayment penalties. So always talk to your local lenders.